Well, here's my favorite property man.
Are you?
Hey, Mark, good to
you
you
good?
snuck into the studio while I was busy talking to Cape Town.
Absolutely.
Yeah, nice to have you here in Joburg, and good numbers. Also, you tell us you've beaten what the market expected, but it doesn't look that hot on just absolute terms. Distribution up 7%.
That's what that's what the sector does. The market expects anything from 6 to 7 and a bit. Growth point we're about 7. I say pleasing because I'm still used to the double digit in my head. So I would have been happier with 8, but you're not going to get there when you've got a 2% GDP environment, trade balances, no confidence, really take up of spaces, musical chairs. You get the odd new entrant who needs 100 square meters in the media space, but other than that, there's not a lot of new space, not a lot of.
So
new
the
space
secret's
happening.
out,
The
100
secret's
square
out,
meters.
yeah.
Oh my goodness!
But it's not a lot is happening. It's just, Ernst & Young move from Corlett Drive to here, and they vacate that, and it puts the market under pressure. And everybody's just they're taking more space, but they're vacating good quality space, which stays vacant. So it puts the whole market under pressure. You've got cost pressure still. The rates thing is never ending.
So now you manage. Now you have to manage really aggressively.
Very, very hard. And I think for us, that's one of the most pleasing things. You'll see that to all intents and purposes, our total cost went up 3 million rand, less than 0.06%.
How do you do that?
Well, two things. First of all, we contained and we lent everywhere, but we also internalized our electricity. And we're starting to get payoff on what we've invested in more modern and load shedders, and don't ask me all the technical stuff. So our net electricity bill reduced by about 25 million. And we really got the benefit of that probably for half the year or 7 months. So that'll carry on into next year, but then that'll be a base, and it's a 2015 challenge. So these are the kind of things. So it was cost, lowering of debt, the fact that we grew our income by 6% is huge in this market, particularly offices at 5, when most of the other guys are doing 2.5, 3 or negative. So those kind of things, I would say pleasing as opposed to good.
Peter Brook was telling us a little earlier about the search for yield, about how there is very little yield internationally. You've got an ADR, in other words, letting
We've got an ADR.
people in the US invest in Redefine. Has it been successful?
It's just started. I'm told that it's a slow process. But it's interesting. In 2008, we had 1.4% of our shares in offshore, and our market cap was then about 10 billion. Today we're 30 billion, and it is 16%. So it's one thing to look at the percentages, but if you look at the actual investment, when we had the market dipping, when bond yields went up halfway through the year, we had a trade on one day of about 28 million shares. I said, I'm sure that's offshore investors bailing. It was just the opposite. Our second largest shareholder now is a US custodian fund, owns 6%.
I do sense, though, in the commentary to the results, a little bit of nervousness from your side. You say that the gearing of 40%, you want to reduce your gearing to below 40%. What's going on there?
No, we've always had a target of mid-30s. And we can gear up to 60. We've got a self-imposed limit of 45. We've had quite a lot of acquisitions. So what we want to do, and we've got a pipeline now of 3.4 billion. So we've said we want to exit our government portfolio. That on its own has the effect of a 2 billion off the asset base and 2 billion off the debt. So that reduces it to about 36%. We've substantially reduced our high prop units in swaps for fountainheads. We're left with just short of R1 billion. We'll sell those in the next couple of months, and that will reduce it. And then we will have these acquisitions. Don't ask me when they'll come on balance sheet because we're reliant on transfers and competition commission, but let's say over the next 6 months, and then we'll have to fund each of those, and that will push it up again, and we should end the year at about 35%.
Which is still down from where you are at the moment.
Yeah, no, that's where we want to be. We're always 33, 34%, so we're up a little bit. But we told the market last year we would peak at this sort of level and then reduce it.
These government properties, a new listing on the JSE.
Hopefully, yes.
When is it likely to come, and what are you going to call it?
We had a name Sovereign, but that's now become a bit of a problem. We'll find a new name. We were far down the track on this one, and then the market turmoil mid-year made the yields not attractive. Then we had some issues with our BE partner. We now have a new BE partner, and I think by the next 2 to 3 weeks everything should be signed, and then it's the timetable of going through the process with the JC and getting all the approvals. So I'm hoping end of February, March, we could get it away.